Let's check in with the Forex majors right now. Dollar yen sitting at 90.71. As for the euro dollar, the level there, 149.13 right now. Well, let's get straight to our next guest, Adrian Foster. He's Asia Pacific Head of Financial Markets Research at Rabobank. He joins us now live from Hong Kong. Adrian, great to have you with us today. I wanted to jump straight into one of your forecasts in your latest research. I noticed that you revised your euro-dollar forecast to reflect the recent US dollar weakness. Is this, I guess, a reflection of your other forecasts with the effect of the weaker US dollar on other currencies?
I think if you look across the spectrum, we have revised several crosses versus the US dollar higher. The euro is the primary one. Aussie dollar and Kiwi as well have outperformed expectations. In the case of dollar yen, I think we've had a reasonable handle on that, and that's essentially unchanged. We called the bottom at around 88, 89, and it's sitting somewhere comfortably around the 90 area now. But clearly there has been a bit more momentum in euro than we were factoring in. And the particular driver of that euro-dollar forecast as we look into the end of this year is a historical seasonal pattern that we often see in November and December. So we've factored that in. The bigger picture, if you like, is that we still see dollar upside through next year, but clearly the levels have challenged us a little bit in the last couple of weeks, so we've incorporated that.
Well, I think that's a very good point, Adrian. In fact, it really does seem to be the currency market focus really is all about these imbalances between currencies, which is certainly for the short term anyway expected to continue. And this discussion is likely to continue at the meeting of the G20 finance ministers, of course, later on. But we've had some comments from some of the bigger countries. France saying the euro at 150 was a disaster for Europe. China worried, of course, we know that a weak US dollar is in fact going to stoke inflation, and the Bank of Canada also making comments overnight saying its currency strength against the greenback would more than offset the good news that's coming through on Canada's economic growth. So in terms of these conversations that we do seem to be having more and more, do you think that there is going to be a level of intervention coming through for the weakness in the greenback, in particular from the US?
Sorry, did you say a level of intervention in the currency markets?
That's right.
I doubt it from the US. I think the US policy on its currency is essentially one of benign neglect. I mean, they often repeat this strong dollar in the interest of the US mantra, but I think it's been a long, long time since they've really backed that up. The focus really is on the US in this whole equation, I think, and the US deficits. And we've seen Bernanke in the last couple of days pointing or sort of, encouraging some trading partners to adapt their policy. But my observation is that it's always the debtor country. When we have imbalances, there's two sides to it, of course, and both have some equal share in the issue of this imbalance. But it's always the debtor country that bears the cost, the direct cost. We saw that in late 90s with Asian financial crisis, and we've seen it with the financial crisis centred in the US now as a result of the deficits that America's run over the last couple of years. And I think that you can make the case that the foreign capital inflow to fund US deficits has overwhelmed the US banking system and resulted in the crisis that we've seen. So I think really the US needs to be looking close to home on this issue, and rather than spending too much effort encouraging trading partners to make changes, focus on their own imbalances that they can have direct control over.
Adrian, when you look at currency trading, certainly over the last couple of sessions anyway, we've seen huge volumes go through the Aussie dollar cross. In terms of where that's headed, could we reach parity by the end of the year, like one of the analysts told me yesterday?
I would never say never, of course, is the golden rule in FX, but I would be very, very surprised if we did see parity through the end of this year. I think, if anything, there's disappointment coming in the Aussie dollar, and I say that because I think the market's very bulled up on the prospects of a 25, seems to be definitely expected, and also the potential for a 50 basis point hike in November, yet from the RBA. My reading of the governor's recent speech, and of course the minutes that have just come out in the last day or so, is that they're very much focused on justifying, explaining and discussing the recent hike that we saw in October. They're not, in my opinion, signalling an imminent hike pushing into November. So the clear risk factor on the RBA outlook is the third quarter CPI coming out in around about a week. But on a sort of middle-of-the-road reading of that CPI number, I think the RBA will be sitting pat in November. I think they'll be assessing the impact of the rate hike they've already put in place, and that's why I think there's some disappointment coming in the Aussie dollar in the next couple of weeks.
All righty. Okay. Adrian, great to have you with us today. Thank you so much for joining us. Adrian Foster with me there from Rabobank.